Hello everyone, I'm Sam Garetano. I am a portfolio manager within Brookfield's infrastructure group. I'm pleased to talk about Triton International, the world's largest owner and lessor of intermodal shipping containers, and a company that plays a critical role in supply chain logistics globally. Today, about half of global trade travels via intermodal freight containers, and with a fleet of over 4 million containers, Triton owns 1 out of every 6 containers in the world. This fleet is carried by the world's major shipping lines, and Triton's top customers represent 85% of global shipping capacity. These containers truly are the building blocks that form the foundation of global trade and connect the world. Shipping containers play a vital role in forming the backbone of global supply chains. They facilitate the safe and efficient transport of essential goods and their supplies on their journey to support economic growth. They're known as intermodal shipping containers because they're designed to be transferred seamlessly across different modes of transport. On ships, these containers can be stacked to transport thousands of units of goods, and once at a port, they can be transferred to trains, where they're transported for long distances over land, or to trucks for transport over shorter distances, including the last mile to logistics facilities or retail centers. The containers we see everywhere today were standardized in the 1950s. And they come in various types, including dry, refrigerated, open top, flat rack, and even tank containers, all of which Triton offers. We've seen their importance grow to meet the expectations of the 21st century. Everyone wants an efficient supply chain, and modern-day shipping containers allow for that. Intermodal containers are essential to the efficient functioning of the global supply chain. Despite a great deal of attention recently on the reshoring of critical goods such as semiconductor chips, lower-cost goods will continue to come from less expensive manufacturing centers and continue to be transported by containers. At Brookfield, we completed the take private of Triton in September 2023. But true to our reputation as a patient investor, our pursuit of the company actually began several years prior. One aspect that stood out was that the company had undergone a transformation in its capital structure during the pandemic. And this largely went unnoticed by public market investors. So in the summer of 2022, believing that the business was undervalued, we made a toehold investment. This allowed us to build a positive relationship with Triton's management team and the company's board. We were able to quickly determine that the company had the key characteristics that we look for in our infrastructure investments. Businesses that provide an essential service, have high barriers to entry, strong cash flows, and downside protection. And during our due diligence, we came to like the company for many more reasons. Like us, Triton's management team believed that the public markets had been undervaluing the company for several years, causing them to wonder whether the public markets were the right home for the company. At Brookfield, we were able to differentiate ourselves early on, and we emerged as the preferred partner for Triton due to our access to capital, our global reach in over 30 countries, and our operating expertise in the transport sector. We were one of the few potential partners with access to the large-scale capital needed for the size of a potential take-private, which was a $13 billion enterprise value transaction. Triton's market-leading platform is nearly 2 times the size of its next largest competitor, and Triton's scale affords it a number of advantages and makes it the partner of choice for the world's top shipping lines. The company has a global network where customers always have access to a container when needed. They can drop off a box on one side of the world and immediately pick up one on the other. This gives Triton reliable access to a sizable quantity of high-quality containers at competitive prices, as well as a deep reach into the secondary market. While these containers last 15 years at sea, they can be used for another 20 to 30 years in their extended secondary lives. For example, they were used to help construct stadiums for the World Cup in Qatar. Containers are also used to build small homes, restaurants, and even infinity pools, among many other uses. The growing secondary market helps add to the demand and value for these units and for Triton and our investors. The business has a highly contracted asset base that provides stable cash flows and attractive risk-adjusted returns. Approximately 90% of Triton's asset base is contracted on triple net long-term leases with an average remaining length of 7 years and a very sticky customer base. And the investment's base case return was largely based on the business's in-place cash yield. And what really strengthened our conviction was Triton's resilient and defensive business model. This business has a highly attractive cash flow profile with 90% EBITDA margins and significant cash flow conversion. With asset utilizations historically over 95%, Triton rarely has a container not being used. And while the base business is highly cash generative, there are multiple value-add initiatives that we are working on to further enhance returns. This centers around our ability to leverage the company's scale and global network to drive lower procurement and financing costs, as well as higher fleet utilization and resale prices. We also believe we can drive incremental returns by executing on a few key initiatives. These include using data scientists to optimize contracting yield while also extending the container's useful lives, as well as opportunistically pursuing sale-leasebacks as a strategy to expand the platform and provide financial flexibility to Triton's largest customers. Triton to date is performing well above our plan. Triton continues to experience elevated demand as geopolitical events in the Middle East have resulted in prolonged voyage times and a slower container turnaround. As a result, fleet utilization has increased to over 99%, and we added nearly 900 million of new containers for delivery in 2024 to meet additional customer demand. This represents over 5% of the total fleet. This is in contrast with the lower utilization we had conservatively underwritten. We appreciate you taking the time to learn about Triton. We believe it's a great example of a Brookfield infrastructure deal. It also highlights several key areas of focus for Brookfield. One is our history of building long-term partnerships with our portfolio companies, providing them not only with large-scale capital, but also access to operational expertise and industry relationships to help drive their growth. Another differentiator is our ability to slot Triton into the broader Brookfield ecosystem, enabling proprietary insights on the global supply chain to flow into and out of the company. This investment also highlights our long-standing, foundational approach of deploying capital into essential assets and businesses that help form the backbone of the global economy and that can generate attractive risk-adjusted returns across market cycles. Thank you very much.